in trading and investing. In fact, women teach trading and investing. This event is brought to you by Timing Research and TradeOutLoud. The event is being recorded, and all the recordings will be available as soon as they're processed on the TimingResearch.com website. David Kosmeter and I would like to welcome everyone today, and we will be your host. So before we begin, let me remind you that all information provided today is for educational purpose only. It should not be construed as investment advice regarding the purchase or sale of securities, options, futures, forex, or any other instrument of any kind. Trading involves a high level of risk and may not be suitable for all investors. You could lose money. So before deciding to trade, you should carefully consider your objectives, your level of experience, your risk appetite. Individual performance depends upon each person's skills, type, commitment, and effort. Results may not be typical, and individual results will vary. You must do your own research and make your own trading decisions. So with us today, we have a great panel and great presenters. And to kickstart the day, we have Jody Samuels, Wavy Tunnel Pro. Thank you so much, Jody. You have the mic.
Thank you, Anka. Thank you, David. And today I'm going to be wearing my trading hat. Yesterday I wore my coaching hat and we discussed some trading habits. Today I'm going to dive into how to apply the 3 top Elliott wave setups. So looking at the market cycles and understanding where you can get in and where you can get out to achieve consistent profits in your trading. This is the disclaimer. And this is me. What I'm teaching today is not in my book, just to let you know. What we're going to talk about today is how to anticipate market direction by reading the market map. Is the market going up? Is the market going down? How can we tell? Then, how to locate and trade with confidence the 3 top Elliott wave setups using a simple checklist. So there are Elliott wave setups that get you into the trend, and that's what we're going to be looking at, because as soon as you internalize those trend setups, you will be more apt to recognize them when the trend is moving up or down. And trading with confidence is really key. I mean, that's really important as a trader, to develop the confidence in his or her skills and his or her trading strategy, trading system. And then finally, we will talk about how to trade the most lucrative setups for maximum profits and discuss risk management. This is important for you to know. Why? The market is getting complex. It's much more volatile these days. That means that there are more money-making opportunities, but there are also more opportunities to lose money, and lose money quickly. So your entries and exits are really, really important during these volatile times. And it's very exciting for traders. I'm not saying it's not, but you have to be aware. And emotions are the Achilles heel for traders. So how do we get around our emotions? We need a system that removes the emotions, a system to follow. And you need to filter out the bad trades. And if you're planning to adopt automation, get your foundation first. Your capital is likely limited, so if you blow up your account, you might not get a second chance. So pay attention. Is this for you? If you're an experienced trader, this is clearly for you. It can help you take your trading to the next level. If you're a new trader, this is absolutely for you. This can save you years of trial and error figuring out how to make trading work for you. I'm going to confess, I've been trading for more than 30 years, actually 40 years at this point. You may think I have an advantage over most traders, and to a certain extent, you're right. But in case you don't know me well, I'm just going to tell you a little bit about myself. I traded currencies. That's how I started for 14 years for JP Morgan on Wall Street and Bay Street in New York and Toronto. I was the lead trader for the British pound for 6 years. I traded it from 240 to 105 back to 140 profitably. I've been trading for 20 years as an independent retail trader, just like you, trading futures, forex, stocks, and options. So if you are starting to think, oh, trading must be easy for Jody, but not for me, I also hit a wall after leaving the bank. Yes, I was an institutional trader, but it really, it on the one hand, I was confident. I had my bank experience, but on the other hand, I had my doubts and uncertainties just like anybody else. I was starting on my own. I didn't have access to the bank support that I was so used to and the flow of information that I relied on. And to top things off, back then I had to pay $2,500 a month in data and chart fees. This was in the 90s. $2,500 a month in data and chart fees, when now data and chart fees are non existent. It's free. And I traded futures because there was no established Forex retail market yet. So I got into trading futures, trading 20 different futures markets. So, what process did I follow to remove any hint of doubt, uncertainty, and to overcome starting the month $2,500 down to finally become an established and profitable retail trader, just like you? The same process I'll show you now so you can remove uncertainty, get clarity, and trade confidently for consistent profits. And I will give you that briefing now. Let's get started and talk about how to apply the 3 top Elliott Wave setups to achieve consistent profits in your trading. For me, there are 3 steps. The first is the analysis, and I'm going to show you the market map and how we analyze to see if we're in a trend or not. The second is the strategy, and I'm going to show you the 3 top setup strategy. And the third is the optimal risk reward and trade management. So with all of these 3 pieces, these comprise the system. Let's start with the analysis. This is the first step. It's to have a thorough knowledge of the market. It's getting the context of the market to determine possible future scenarios. And by that, I mean, is the market going, we think, we do a little analysis. Is the market going up? Is it going down? Is it going sideways? What are some of the targets? Where do we think it can go? And be prepared to take advantage of opportunities that arise. We can only know that by doing a little bit of analysis, looking at the market. And I'm going to show you how I look at the market cycles in just a minute. So in our system, we use the market map in order to provide market context and increase the likelihood of successful outcomes. This is the market map that I follow. This is the Elliott Wave market map. On the left is an uptrend. On the right is a downtrend. It's just the opposite of the downtrend is just the opposite of the uptrend. We start at point 0, which is the beginning point. This is the visible low on the chart. And the market moves up in 5 waves. This is the standard Elliott Wave 8-wave cycle. And then it corrects in 3 waves. And it's denoted by letters, ABC. So when we move up, we're moving up in numbers, waves 1, 2, 3, 4, 5. And when we move down, we usually correct in 3 waves. That's the start of the correction. We could trade sideways for a while, and this 3 waves then can end up being some more waves, and we label that in letters. When we get to the top of the market, we label that as point T before we have the correction. Usually, when the market is in an uptrend and is trading the 5-wave sequence, we can draw channel lines around that uptrend. And as soon as the market breaks down through the channel lines, that's when the trend is going to correct or reverse. Okay, trend will correct or reverse once the channel gets broken. Where you see the red sideways markets, these are the corrective waves. So wave 2 is a correction, wave 4 is a correction, and wave B is a correction. So if you're thinking, yeah, that's right, that's where I'd want to get into the trend, you're absolutely correct. You'd want to get into the trend during these corrections or once we start to move higher after we correct. And corrections can be sideways or they can be steep corrections. Sometimes we have a very steep wave 2 correction where we almost form a double bottom. So if you decide to get in on that wave 2 correction, you would leave your stop below the low. But I am getting ahead of myself. Let's look at our wavy tunnel setup, which corresponds to the 8-wave market cycle. This is my chart setup that I use. It's called the Wavy Tunnel. I'm going to give you an opportunity to join the Wavy Tunnel Pro program at the end of this master class. But look at how the Wavy Tunnel Pro eloquently maps out the 8-wave market cycle. You can literally read the waves just from the setup 1, 2, 3, where we have a peak in the awesome oscillator. That's our wave 3. And then we have a wave 4, and then a wave 5 where we have divergence. The awesome oscillator makes a lower high when price makes a higher high. Then we have a beautiful 3-wave correction back down to the tunnel. So this is the 8-wave market cycle translated by the wavy tunnel. This is the ideal setup. Not all markets look like this. Some markets are in sideways corrections for a long time, sideways markets for a long time. And we don't have this clear setup, which is why it's important to, what I like to do is trade this setup. So I've internalized it. I've been looking at this day in and day out for a very long time. I've internalized this setup. And when I see this setup on any time frame, I can trade it. And that's what we're going to teach you in our program. And one way to think about it is this is your low-hanging fruit. The ideal setup, the ideal trading setup. Why trade a complicated setup? And the same is true for the downtrend. It's exactly the same. Okay. Now let's get to the strategy, the 3 top setups for pulling the trigger. My favorite Wavy Tunnel Pro setups. So the strategy is the second step. The first step is the analysis. The strategy is the second step. The second step in my system to reaching the path to success is to have a highly effective strategy, which is easy to understand when making a trading decision. After a good analysis, strategy is used to identify the entry point, the stop loss level, and profit target to know when to trade and when to stay out of the market. And removing the emotions is key. You learn your setup, you follow your setup. What are the 3 top setups? I've labeled them trade number 1, trade number 2, and trade number 3. Trade number 1 is down here. This is when the market moves up and corrects, the first move up in the beginning of the trend. This is buying for the wave 3. So sometimes, like I mentioned, the wave 2 will correct almost 100% of the wave 1. And you would leave your stop below 0.0, or you could even leave your stop below 0.2, and you would buy it once we take out these price highs, okay, for the wave 3. So this is the earliest entry into the wave 3 move. There are other entries along the wave 3 because the wave 3 is the steepest wave. Usually it's the strongest wave. It's usually the longest wave as well. One of the rules is that wave 3 cannot be the shortest. amongst the waves, the 5 waves, waves 1, 3, and 5. Wave 3 cannot be the shortest. So this is trade number 1. Trade number 2 is to buy the wave 5 move. So you're buying the market after a wave 4 correction. After a wave 4 correction, you're looking for that next move higher. That's trade number 2. And this is one of my favorite trades. I can see this very, very easily. And I love to trade the wave 5 move. We have a really nice checklist for looking to see if the wave 4 is complete in our Wavy Tunnel Pro course. But I'm going to show you some steps here in just a minute. And then trade number 3 is the end of the trend trade. So after we have divergence, it's to sell for the correction. Now, if you're long, you can also sell to get out of your long trade. Doesn't mean that you have to go short. You can either go short or you can just exit your long position. So trade number 3 is to sell the wave A with a stop above point T, which is the end of wave 5. And that's what we're going to start with today. We're going to start with the end of the trend, and then I'm going to show you some examples for the wave 4. But before I do, let's just look at, I just took a few screenshots yesterday of 2 stocks, Berkshire Hathaway, and I want you to see, this is the exact Wavy Tunnel Pro pattern that we discussed, the 8-wave market cycle. And I've just noted where the trade number 1 would be. It would be once we take out these price highs over here or over here. It really, this is the low point on the visual chart. So this area is where you would go long. Then we have a peak in the awesome oscillator. We have a correction. And this is your trade number 2 to buy for the wave 5. And then we have divergence. And after the divergence, we have a nice move down to the tunnel. And this is also after we have the 8-wave market cycle, especially in stocks, because we're in significant uptrends in many, many stocks, as you know, this would be another entry. So this would be another entry for the next move higher. And trade number 3 is to sell the wave A, stop at point T. So here is where you could take some profits and then look to rebuy, okay? Or just hold and if you're looking for the bigger picture. This is only the hourly chart, and you would look at the daily chart to get perspective on the bigger time frame. So this is one piece of the puzzle that makes up the bigger time frame, one market cycle, okay? The 8-wave market cycle on the hourly chart. And then you add up all of these market cycles and you see how the daily trends unfold. But this, looking at the hourly, gives you lots of opportunities for entries. So that's Berkshire. And this is Walt Disney, another one. And I'm long these two because I love the patterns. I'm seeing, I see the patterns in these 2 stocks among others. So again, trade number 1, buy for the wave 3. This is when the market, we have a visible low and we start to move higher. And then we have a peak in the awesome oscillator. And this is where you would buy for the wave 5. And then we double top in the awesome oscillator. We don't have divergence. So when we double top, it's not exactly divergence. Divergence means that the market is running out of steam. When you double top, you are also running out of steam. So here, yeah, I mean, you could take profits and wait to rebuy at this level. Now let's get to the strategy. I said that we were going to start with the trend reversal, the end of the trend strategy. So that would be right up here at point T, right up here. And This also applies to point 0. That's also an end of trend, but we've just moved up in 5 waves. Let's think of it like that for the point T. Our strategy consists of 4 points, and this, you can start using this right away. It works. We look for a reversal candlestick pattern. We look for divergence or a major peak. We look for a trend line break and a 1, 2, 3 reversal on a smaller time frame. So this example is of the Aussie dollar. It's the daily chart, and it's not a new example. It's from 2020. This is educational, so I'm just showing you how to use the strategy. This is the daily, and this is a reversal candlestick pattern. It's a long tail. Whenever you see a long tail at the bottom or the top of the market, that means that in this case, the sellers have lost control. So the sellers take it all the way down, the buyers take it all the way back up, and we close in the middle in this case. And that's a sign of a potential reversal pattern because the sellers have lost control. So this is your reversal candlestick pattern. We would check this off on the checklist. Then we look for divergence or a major peak. In this case, this is a major peak. You can see the awesome oscillator histogram bars moving lower and lower and lower. And this is clearly a peak in the awesome oscillator when you look at the histogram. So that's a check on our checklist. We're looking for a market reversal, so that's the second step in our checklist. Trendline break would be the third. The market doesn't go down forever. The market doesn't go up forever. So you draw your trend line, and when we break, that's a sign that perhaps the market is turning around. And then we look at the 1, 2, 3 reversal on a smaller time frame. I've moved from the daily to the 4-hour chart to actually trigger a trade. This is the trend line we've broken through. And the 1, 2, 3 reversal is a pattern which changes the direction of the trend. So when we're in a downtrend, we have lower highs and lower lows. And the 1, 2, 3 pattern, once we break, this is point 1, the low on the visible chart, we move up, we label that a point 2, we come back, usually halfway, we label that a point 3, and when we close above point 2, which really doesn't happen until here, that changes the trend. And then we can say that we have higher lows and higher highs. This is the 4-hour, so we would draw our horizontal line at point 2, and then the market comes down, we test it, we don't close above it, we come down again, and here we form another 1, 2, 3 reversal that you can see better on the hourly chart. So you can certainly trade this 1, 2, 3 reversal because it's taken a very long time, and it gives us another opportunity to trigger a trade once price takes out this price high. So we'll get back to that example in a minute. Here is another example with gold. We have, let's go through the checklist again. We have a reversal candlestick pattern at this market peak. It's an engulfing pattern where we have the red body engulfing the previous candle's blue body, and that's a reversal candlestick pattern. We have divergence or a major peak. In this case, we have a major peak. I've drawn the trend line. We have a trend line break. And let's look at the 1, 2, 3 reversal on a smaller time frame. We label this point 1, point 2, point 3. The dotted line is across point 2. That triggers the trade once we break down below point 2. So this is our 4-step trading strategy that we can use on any market on any time frame. now, so that's our end of trend strategy. We're going to get back to that in a minute when we talk about risk and trade management. But let's look at the second top setup, which is buying the wave 5. Okay. So we have a peak in the awesome oscillator, the market corrects, and we look to buy. So this is a 4-hour chart. We label this a 3, 4, 5. Okay. And we look for divergence or a major peak followed by a wave 4 correction. So this is, we have divergence here on this move higher, and then we correct. And we're looking to get in for the next move higher. So we can check, we have divergence in this case, and now we're going to look for our reversal candlestick pattern. Here we have it. We have a long tail. This is a hammer right here. So that's a check. We draw our trend line. We've closed above the trend line. So that's a check. And now we can label our 1, 2, 3 reversal. 1 is at the bottom below this hammer low. And then we have a wave 2 and a wave 3. And this is the line that we draw. And once we close above it, we would buy. For the next move up, which would take us above these highs, potentially. That's what we're looking for. Well, this is the same chart, and we break above the 0.2, and then the market continues to move higher. This is Facebook. These examples are old, okay? These were during the summertime, so the prices are vastly different right now. Not necessarily for Facebook, but for some of the others that we're going to be showing. But it's the same pattern. You're looking for divergence or a major peak. We have a major peak. Okay. We look for a reversal candlestick pattern and a trend line break. And then the dotted line is the 1, 2, 3 reversal. This would be 0.1, 0.2, 0.3, and this is the 0.2 of the 1, 2, 3 reversal where you would enter a long position once we break above it. So that just gives you a way to get in case that once the market starts to move up, so that you don't get in over here only to watch it move down further. You want confirmation that the market has indeed turned around. So you buy on the break. That's our 1, 2, 3 reversal pattern. Then you can use your Fibonacci extension tool and you run it from, and I'm introducing another concept right now on how to set your profit targets. You run it from the wave 3 high to the wave 4 low, and this gives you some kind of projection, some profit targets for your trade once you enter a long position. So this is the same market. We actually get to enter long once we break above these dotted lines, and you can set your profit targets. Yesterday we discussed the 3 profit tiers. You can set them, you can use that system to set your profit targets, or you can use your Fibonacci extension tool. And the high price on this swing was actually 305, which ended up being the 200% Fibonacci target. Okay, so a nice trade, taking your profits along the way. Very, very nice. Okay, the next this is Roku. Roku is much higher now, but this was back in August. So the same thing. We look for divergence. We have our divergence, and then the market corrects. We have a reversal candlestick pattern. This is a piercing pattern. It's a reversal pattern. That's a reversal candlestick pattern. First, we had divergence. Then we have the trend line break. And I've put the dotted line across the 1, 2, 3 reversal breakout point. This is the same Roku chart. Now I've run the Fibonacci extension tool from price high to price low, wave 3 high to wave 4 low. And I get these Fibonacci extension ratios. And you can set your profit targets at 2 or 3 of these ratios. The high price was 239 on this go around before we had a major correction to rebuy, and you would see the same exact pattern to rebuy. And that was a 361.8% Fibonacci target. So that 361.8 Fibonacci target is an extended target. Okay, 261 is also extended. Anything below 200% is sort of standard, but anything above it is extended. This is beyond, same pattern. We have the divergence on the price move higher. Then we have the reversal candlestick pattern, which is a hammer right over here. We draw our trend line, we have our trend line break, and we draw our dotted line across, and we get in once we break above this level. This is all another reversal candlestick pattern. This is an engulfing pattern, so we had a long sideways move, which is another reason why you want to wait for the break to get in. You set your Fibonacci targets using your extension tool, and it spits out these targets. So you have to come up with your price, where you think price is going, and set your profit levels, profit targets, or you could just follow the trade and get out all at once. It's up to you. The high price on this move was 197, and that ended up being 161.8%. Okay, the Fibonacci target, and that's pretty standard. That's 161.8 is pretty standard. So we discussed a trend reversal setup, looking at the reversal candlestick pattern, divergence or a major peak, trend line break, and 1, 2, 3 reversal. And we discussed getting in for a wave 5 move. And with this, we look for divergence or a major peak first. With the end of trend, we look for the reversal candlestick pattern first. It really doesn't matter. You can look for either of these first. But we look for divergence first because it's on the prior swing move. But it's the same for things that we're looking for on our checklist. Okay? And these are patterns that you can look for right away in your trading and get started right away. I just follow very specific criteria in my 4 lenses checklist to evaluate if I want to trade a specific setup. I remove subjectivity with the specific criteria. The greater the objectivity, the fewer the emotions. And I really do think that removing our emotions is key in these markets. It's very easy to get caught up in the emotional, psychological roller coaster ride of these markets if we let it. So the greater the objectivity, the fewer the emotions. That's why we want to have an objective trading system or trading strategy. So what we learned so far, we discussed the analysis, looking at the market map. We discussed a strategy, the 4 lenses checklist, looking at the 3 top setups for pulling the trigger. So getting in at the start of the move, getting in for the wave 5, and getting in at the end of the 5-wave sequence. Now we're going to discuss briefly trade management using optimal risk reward for achieving consistent profits. The third step in my system is trade management. The goal is to apply optimal risk and money management in order to maximize profits and lower the risk. This step can tip the balance between being profitable or not. For example, by trading only setups with a minimum risk reward ratio you set in advance, like 1.5, you can refine your analysis and improve your performance stats immensely. Then you need a smaller win-loss ratio. Now, if you're a day trader or a momentum trader, you're not too concerned with the risk reward ratio. It's typically going to be 1-to-1. I mean, hopefully you're not going to keep your position, hold your position if you're trading for like little, trading for small moves. You're going to get out when the market starts to move against you, and you're also going to take your profits. But as you begin to trade as a swing trader or a position trader, you will want this ratio to go up. Especially as a position trader, you want to learn how to ride your profits and minimize your losses, because as soon as you start to take trades where you're losing a lot, it pulls down the P&L. It just pulls it down. So it's really important to just get out of a trade, define what your maximum loss is going to be per trade, and get out. There's always another trade. And for those of you that are trading, you do know what I'm talking about. Okay? Do you know what can you relate to what I just said? Type in the box if you can. So I'll just repeat that. When you have a loss, you want to get out, because if you don't get out and the loss is much larger than you would make on your profits, your profitable trades, then that's where trading becomes a zero-sum game and you can't get ahead. I see this over and over again. Okay, I'm glad some of you agree. Let's go back. Yeah. Okay, you know what? I'm going to address this. That's a hard decision, just to stop and run or change in direction. Right. I hear what you're saying. Yeah. Well, the way I like to look at it is I like to put a loss limit on, just a loss limit on the trade. I can always get in again, because when I start to think about it, I usually end up holding my position, and my loss can double very, very quickly. So it's just a hard decision that I have to make, to just decide to just get out and then take another look. All right, so let's go back to the Aussie example with the 1, 2, 3 reversal pattern. And we said that we are buying at this level, 58.45. The stop is at 57 below these lows. So that's 145 pip stop loss. And now we're going to discuss a way to figure out our profit targets. So we know our stop loss is 145 pips. And I think yeah. So what I like to do is to run the Fibonacci tool on the previous swing move. And I just showed this to you as a simple example. but you can also run it on the entire swing move. You could actually run 2 Fibonacci's, one on the whole move down, which I didn't do, and one on the last move down, which, just to keep it simple, that's what I've done. Okay, when you run it on the last move down, you are definitely limiting your profit potential versus running it on the whole swing move down. So one way to do it is to run your Fibonacci tool on the last swing move, and you come up with the 3 typical Fibonacci targets: 38.2, 50%, and 61.8%. If you set these targets, then these are the profit targets that you are going to hit, and your win-loss ratio, your profitability is going to be greater than the size of your stop loss. I think I deleted this slide which shows you exactly what it is, because I didn't think we'd have time for it. I definitely deleted the slide. But there's the other thing that you can do on the next slide is you can use the next 3 Fibonacci targets: 50%, 61.8, and 78.6. And then your ROI will be higher. Like if all 3 profit targets are hit, that's a way to increase your profitability. So your first target is 50% versus 38.2. And if we look at the price action, I took this, I didn't update the slide. This is an old example. Like I said, all 3 profit targets were hit, whether you used 38.2, 50%, or 61.8, or 50%, 61.8, or 78.6. It's all about letting your profits run. That's really what it's all about. Now, some traders like to hold the position and trail their stops. That's one way of doing it as well. But this is just a way that, I typically do it because I'm not at the screen all the time. And I just want to make sure that my profit targets will get hit if I set profit targets on the market that I'm trading. If I'm swing trading, then I will set profit targets, and I'll be happy when my profit targets are hit. That's the other thing. We have to be happy when we take profits. We can't be like, there's no point in being sad if the market keeps going. There is always another place to enter a trade. Always another place to enter a trade. But the key is, by taking profits, we don't run the risk of the market going against us and giving back all of our hard-earned profits. I'm sure everybody can agree that our profits are hard-earned. And, hopefully everybody here will experience having multiple profit opportunities and increasing their bottom lines, i.e. increasing their trading accounts. And that is really what my hope is for you. So let's just review. This is a little strategy to trigger the trade. And we look at the candlestick patterns, the reversal candlestick patterns, divergence, and a trend line break. And then we trigger it on the 1, 2, 3 reversal pattern. So you can look at the first 3 points as the analysis, and then triggering the trade on the 1, 2, 3 pattern. Now, I'm going to tell you about the Wavy Tunnel Pro program right now, which is what I run and how I trade. So this is just a glimpse of just some skills that are important to learn, and certainly you can walk away today and use this trading strategy. The Wavy Tunnel Pro has 6 trades based on the market cycle. The breakout trades are all of the trend following trades, the 4 breakout trades. So we actually learned the breakout 4 trade is getting into the wave 5. That's our breakout 4 trade. And there are some other conditions that we have with the Wavy Tunnel Pro setup. And then the end of the trend trades are called the PW and fill the gap trade. So those are the two trades that we discussed today. And again, with the Wavy Tunnel Pro setup, there are other conditions that we look for. David P. from England said, once you master the simple concepts of using the Wavy Tunnel Pro strategy, combined with the bungees and the semaphores, you can make more accurate, high probability trades each day, resulting in more profitable trades. This is the trading system that has worked for me for over the past 30 years and counting, and it can work for you too. What I'm offering you today, I'm offering you to join me in the Wavy Tunnel Pro 5-day accelerated trading and mentorship program. You can start the program now and then join me for the coaching sessions on starting April 11th for 5 straight days. But if you start now, you can really learn all of the setups and then come for the coaching starting April 11th. The Wavy Tunnel Pro, I'm told, is a solid master's in trading education for all asset classes, instruments, and time frames. And no special software is required. It works on all trading platforms. The Wavy Tunnel Pro 2021 5-day accelerated trading and mentorship program starts April 11th. This is our flagship trading program. And this is my personal system to achieve consistent profits in any market. This is my team. Neil is a master in using the Wavy Tunnel Pro system to run his trading business, and he uses the semaphores. The semaphores and the bungees are just such a neat add-on to the Wavy Tunnel Pro system. I always say that Neil has a crystal ball. I always thought that I had a crystal ball. Well, Neil really has a crystal ball. He can analyze any market and tell you where it's going, and then 90% of the time, that's where it will go. Jeff is our automated trading specialist and stock and options master trader. He cites the Wavy Tunnel Pro training as the program which allowed him to connect the dots in the markets and become a $1 million trader. He is an unbelievable trader, and we have access to Jeff. This is how we'll do it in a 1-week program. Section 1 is the Elliott Wave series. We have to learn the theory first. We really need to beat in these market cycles so that you can internalize them. Section 2 is the Wavy Tunnel Pro strategy. We're going to spend 2 days on that, really drumming in the Wavy Tunnel Pro setups, the 6 Wavy Tunnel Pro setups. And depending on your personality will determine which setups you want to focus on, what comes naturally to your personality. So we're going to work on that to finding what's good for you. And then section 3 is our trading day. That's day 4. So trading these strategies, and we'll go into the trading room. And then section 4 is harmonic strategies. That's day 5. You'll learn the exact trading system I've used to successfully trade in both institutional and retail markets over the past 3 decades. And there's more than 60 years of trading wisdom collected here, actually more than that. The price is $12.97. It's $300 off. This is a discounted price. It's a phenomenal program. You can also do a 3-pay. The website is wavytunnelpro.com. wavytunnelpro.com. That's where you sign up for this program. I'm going to give you a bonus, Ignite Your Soul and Your Bottom Line, the Empowerment Series to give traders the winning edge. This is a 6-session video and webinar series with Yisroel Roll. He's a Talmudic scholar, psychotherapist, and lawyer who shares a psychological CBT motivational approach to master the emotional self. Just phenomenal program. You will get with this, you'll get a 6-part video series and follow-up webinar recordings with traders. So you'll actually hear what he has to say as traders experience what they experience in the markets. You'll get a private one-on-one Zoom session for an hour with him, and you'll get a PDF copy of his book, Stay Woke and Ignite Your Soul. So this is a bonus. What to do next? Go to wavytunnelpro.com. I'm going to put it in the, I'll put it in the box. Dave, do you want to put it in the box? wavytunnelpro.com. Choose your payment plan, get your login information, and gain instant access to the Wavy Tunnel Pro course. Over the 5 days, you will have a chance to repeat 30 training sessions, but you sign up, you log into the website, you will get those training sessions immediately. So the 5 days starting April 11th will just be a review, and we'll have coaching sessions together. The premium bonus is the Wavy Tunnel Pro live Q&A and mastermind. It's a gold nugget for free. You will have access to 15 live Q&A and also 11 student trade analysis sessions. 11 student trade analysis sessions comprised of trade review and analysis so that you can internalize the concepts with numerous examples for practice to speed up your development. You will get access to the Wavy Tunnel Pro and the Wave Count Desk membership with the trade scanner for Forex, stocks, commodities, and cryptocurrencies, 4 London and New York trading and analysis rooms per week, daily wave count videos on 20 different markets, trade with confidence videos and psychology podcasts, trade alerts with entry stops and profit targets through Telegram. You will have access to our Discord membership channel and our automated trading tool. There's a lot here. Just a few good trades will pay for this entire program. And you're right, I didn't show you the semaphore and the bungees because that's part of our proprietary Wavy Tunnel Pro setup, and I didn't show you, but it is something that is just phenomenal, and you will, I don't even have an example to show you right now. You will, once you take the program, you will learn how to use those. But we're still not done. We will hold your hands and mentor you to success in the trading room and Discord channel with our successful members who love to pay it forward. Join the stock channel with our options expert. Join the Forex channel with our Forex expert. Act now for a big discount, $300 off. 12 for $12.97, you will get the entire program. Plus, you will have access to me in the live coaching session. So recap, the Wavy Tunnel Pro 2021 5-day accelerated trading and mentorship program with 30 training sessions and live Q&A. Access now to the Wavy Tunnel Pro original modules, and you will have lifetime access to all of the training material. That means that you can come back and do it again, you know, as often as you want. The Wavy Tunnel Pro Mastermind and Trade Review is really, really key to just cement your training, and then you will get 1 month free to the Wavy Tunnel Pro and Wave Count desks. And of course, premium concierge support, Discord channel, and special reports. You will have access to the empowerment series to give traders the winning edge, 6-week video and interactive webinar series with Yisroel Roll. And all you have to do is go to wavytunnelpro.com, and this is the take action now. If you sign up over the next 48 hours, you will receive the empowerment series with Yisroel Roll. Otherwise, the discount ends on Sunday night, and $12.97 is the best price ever. And accelerated training starts April 11th. If you want to send me questions, email me at jody@fxtradersedge directly, and go to wavytunnelpro.com to sign up. And I really look forward to having you in this phenomenal program. Questions? I'm being asked, what is the smallest time frame that you can use with the trading strategy? You can use 30-second charts if you'd like, or tick charts. This, because with Elliott wave analysis, the markets are fractal. What that means is that you see the patterns in any different time frame. So the same patterns that you see in the daily and the 4-hour charts, you will see in the hourly, the 15-minute, the 5-minute, the 1-minute charts, the 30-second charts, the tick charts. You see the same patterns, and the Wavy Tunnel Pro works on any time frame and on any market. So whether you trade Forex or futures or stocks or options, it works on, well, for options, obviously you're going to have to look at the underlying, the stock. But it works on any time frame in any market. As long as you have data, as long as you can chart it, you can use the Wavy Tunnel Pro. So that's all I have to say. I do hope you join me. Enjoy the rest of this conference. It's a phenomenal conference, lots of great speakers, and I look forward to working with you in my program. Thank you so much.